The Amazon Web Services tie-up with BYD is more meaningful than investors might realize. Amazon will benefit from the relationship with BYD. The near-term value of the relationship won't be significant, but the long-term possibilities look much more enticing. AI could be the difference maker for future Amazon Web Services growth. Let's dive in. Amazon stock forecast. Here's how Amazon Web Services BYD partnership could fuel Amazon's growth. Welcome to Timely Investment Research. At the end of November, Amazon announced that BYD had selected Amazon Web Services as its preferred cloud provider for its connected vehicle platform. Amazon stock barely budged on the news. You would think that the world's leading manufacturer of new energy vehicles, including hybrid and battery electric vehicles, would excite investors about Amazon Web Services grabbing a big chunk of the connected vehicle industry. That's potentially massive revenue once EVs get back on track. Yes, the EV industry is in a funk. Companies have collectively committed about $100 billion across North America to create electric cars that don't just appeal to luxury buyers and early adopters, but to the mass market, Bloomberg reported in early November. But high inflation and interest rates are making vehicle purchases difficult for everyday people, meaning it's hard for EV makers to win their business. Auto executives have said they're worried many consumers have hit their limit. Even the once hot-selling EVs, such as the Ford F-150 Lightning, aren't rolling off car lots. Until that changes, all bets are off in the EV world. So the two questions to ask are as follows. 1. What would an announcement like this by Amazon Web Services be worth to Amazon in dollars and cents? 2. What does this mean for Amazon Web Services slowing growth? BYD and Amazon stock. Although I'm talking about the tangible dollar value of BYD using Amazon Web Services for its connected cloud, there's also the intangible value of such an association. After all, BYD remains Berkshire Hathaway's only automotive investment, despite it selling off some shares in recent months. Buffett may not be interested in certain businesses now, but it's hard to understand why he would sell a stock that has generated substantial unrealized profits since 2008. Despite clear evidence of deceptive practices, it took him years to sell Wells Fargo. If anyone practices letting your winners ride, it would be Buffett. Getting back to the actual Amazon Web Services spend by BYD, I found an article from CloudZero, a company dedicated to measuring the return on investment from your cloud spending. It's from 2023. It analyzes how much spends for its Amazon Web Services, which you can imagine are immense. It indicates that Netflix planned to spend $1 billion between 2019 and 2023 on Amazon Web Services cloud services. That's $200 million annually or nearly $17 million monthly. I can't imagine BYD's requirements would be anywhere near as high. However, the figure above can't be accurate. Amazon Web Services revenue for the 9 months ended September 30 was $66.6 billion. Annualized, that's $89 billion. If true, Netflix would represent 227% of its annual revenue. So, for simplicity's sake, let's say Netflix spends $18 million a year, or about 20% of Amazon Web Services' annual revenue, and BYD's will be 20% of the Netflix spend per year. That's $3.6 million annually. So, in terms of dollars and cents, it's not a big deal. BYD and Amazon Web Services slowing growth. I recently discussed this question, pointing out that based on Amazon Web Services' expected annual revenue of $89 billion, year-over-year growth will be 11%, less than half the 29% increase in 2022. Further, its operating margin was also falling, diminishing the Amazon Web Services moneymaker's value slightly. However, BYD could generate additional revenue for Amazon Web Services through Amazon's AI initiatives like BYD's expansion into AI requires a significant business relationship with Amazon Web Services as it enters North America. In 10 years, the AI component of Amazon Web Services could be more significant than its cloud storage services, etc. The more technologically advanced and innovative businesses, such as BYD, choose to work with Amazon Web Services, the more other companies will do the same. So it's fair to say that the current revenues are a loss leader for Amazon Web Services as it develops more significant revenue streams for the profitable segment. So, To answer the second question, the BYD announcement should be beneficial to helping reignite Amazon Web Services revenue growth back into the mid to high 20% range. Amazon stock is a buy. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.